Good morning, everybody. Thank you for joining us. We have here today the Managing Director of Astron Corporation, Mr. Tiger Brown, who's going to give us a walkthrough of the presentation at Astron on the Donald Rare Earths and Mineral Sands project and answer some questions around the joint venture recently announced with Energy Fuels Resources. I'll hand it over to Tiger to walk us through the presentation, and there'll be questions at the end if you'd like to type them through in the area at the bottom of the screen. Thank you.
Thanks, Peter. Thank you, everyone, for taking the time out of your Monday morning to join us today. It gives me great pleasure to provide you an update following the execution of our binding agreements to form a joint venture with Energy Fuels Resources to collectively develop the Donald Rare Earths and Mineral Sands project. Before we jump in, the transaction represents a major milestone in Astron's history. We've structured the transaction in such a way that it satisfies most, if not all, of the equity requirements required to get us the Donald project into production. From now on, there's now a defined pathway to see the Donald project commercialized and get into production, in which will be a representing of a bring to life of what is one of the world's most significant critical mineral projects and a long time in the making for many of our shareholders. Many of you are familiar with Astron's story, but over the last few weeks, we've been fortunate to have a few more shareholders join us. And for those who have recently followed Astron, allow me to give you a background of who we are and how we've got to where we are today. Astron was initially started by my father in the late 1980s, focused on trading mineral sands products, being that titanium and zircon from Western producers into the Chinese market. Over time, as the Chinese market grew, we grew alongside with it. And in the 1990s, we formed a number of joint ventures with Chinese partners during the privatization era to go downstream and produce zirconium chemicals. We also brought technology into these companies to create high quality zirconium products. And at one stage in the early 2000s, we had become one of the world's largest producers of these chemicals. In fact, we were using so much zircon ourselves, we thought, why not go upstream? Let's have our own zircon mine. And we went out to buy the world's largest zircon mine we could find. It remains the world's largest today. In addition to that, it contains significant rare earth minerals, which will be used as part of the energy transition in electric vehicle motors, wind turbines, and so forth. So that's the history of Astron. And since then, we've sold our downstream business, as many of you will know, in 2008, 2009. And this transaction represents a major milestone for us and a new chapter in our history as we seek to become a global force in the mineral sands market again. I talked a little bit about Donald just before, but for those of you who aren't familiar with this project and recently following us, what it is not just the world's largest zircon project, not just the world's fourth largest rare earth resource, but it's an advanced project with advanced status of approvals, a completed feasibility study for phase 1, which shows attractive economics, and finally, it's 2 product streams which we are producing in relation to the rare earths and the mineral sands products will be in very favorable supply-demand characteristics in a very short order of time. In total, the way that I rationalize this project in relation to its economics is that every year, once we're in operation in relation to the first phase, it would generate circa $300 million Australian dollars in revenue and approximately has 150 million in operating expenditure. What that means is that it will have 150 million circa free cash flow per year from a capital expenditure of circa 400 million. And that is what underpins our overall economics and what holds for the future of Astron. In terms of its location, it's in Western Victoria, approximately 300 kilometres to the northwest of Melbourne, and mining will be undertaken on freehold land for which we already own a proportion. Now on to the transaction itself. Our goal is to one day re-establish ourselves as a dominant player in the mineral sands market. We believe we can do so through the Donald Project and through this transaction. The terms of the transaction provides for Energy Fuels to provide 183 million of cash into the joint venture company, which should satisfy most of the equity that is required to bring it into production. In addition to this cash, Energy Fuels will issue Astron 17.5 million of their shares over 2 tranches. The first, 3.5 million upon completion, and the second, 14 million upon reaching a positive final investment decision. In addition to that, Astron will be appointed as the manager of the joint venture and will continue to oversee the day-to-day development of this project. Energy Fuels will get the offtake for the rare earth minerals, and we have an option for the HMC. One thing I want to highlight for those of you who've been following us is that in total, there are 3 tenements that form a part of the Donald Project, being the mining license that's granted, retention license RL2002, which together form the Donald deposit, and separately RL2003, which is the Jackson deposit. In exchange for our 51%, we'll commit the Donald deposit only into the joint venture. We will still have the Jackson deposit for our own development or subsequent developments by ourselves. A little bit about our partner, Energy Fuels. In terms of this process and why we went into this transaction, we looked at partnering with a number of different Western rare earth processors, potentially, and ultimately, it wasn't just the fact that Energy Fuels was a leading Western critical minerals producer. It wasn't just about valuation, but the reason why we went into this transaction was that it allows us to achieve our own goals. We found in Energy Fuels a very complementary partner who shared our interests in a successful development of the Donald Project, as well as their interests in the rare earth component brings a level of expertise to what we're trying to achieve, where we bring the mineral sands excellence. Overall, the rare earth minerals will be processed at their mill in White Mesa, and that will see the establishment of another Western independent rare earth supply chain. The transaction allows us to fast track our growth ambitions as well, and we'll now we'll look to bring forward our timeline for phase 2, but we're still taking it one step at a time, getting it up into operations first and foremost. On terms of the offtake, which forms the second part of our transaction in addition to the joint venture, the offtake on the rare earths is on arm's length terms at market prices. And that's quite a unique aspect of this joint venture. Astron has the option to take HMC at market prices, and Energy Fuels will take rare earth concentrate at what is market prices. The revenues are to be paid into an incorporated joint venture, and the profits will then subsequently be shared according to our interests, or our proportion of interests, being 49-51 to each party. What that means is that both parties get to benefit from the rare earths price, the market dynamics, as well as the HMC market. And that's a real advantage in this transaction structure. In terms of the offtake in and of itself, there's nothing that's non-standard about this. One of the key advantages that we have now established in this value chain is that it actually, the heavy rare earth components from Donald can be monetized as well as the lights. I mean, Donald project in and of itself has 0.6% xenotime in the HM as well as the 1.8% of monazite. And that 0.6% xenotime represents over 30% of the overall basket value. That 30% of the basket value, the heavy rare earths, the strategic focus at the moment, represents the first establishment, I guess, of heavy rare earth production in the US. As mentioned previously in relation to the HMC offtake and that we still have an option over it, yes, we have our own facilities in Yinko to process the heavy minerals into its residual elements, being zircon and titanium. But what we're seeing in relation to the market is that there's over 7 million tons of processing capacity in China today, and only 3 million tons of concentrate going into that same market. As a result, we anticipate to get pretty attractive payment terms should we partner with a third-party rare earth mineral separation plant. And that's why we haven't determined whether we're going to place 100% of our concentrate into our own plant yet. And we're running that study as a conjoint to the HMC offtake discussions that we're having today. We expect to provide an update to our shareholders on the result of that study in later Q3 on what shape that offtake will take. Finally, I just want to highlight the attractive characteristics that underpin the concentrate market. In addition to that excess processing capacity, that supply of zircon is rapidly diminishing. Historically, the zircon market has had three main producers, and one of which will see most of their production, representing 30% of the world's global zircon supply, diminished by 2028. That represents an opportunity for Astron to get in and set a foothold for us and to be a part of that supply deficit and get long-term customers that we work with as part of our phase one, but also as part of our phase two moving forward. I won't go into the flow sheet in too much detail, but ultimately all of this has been extensively tried and tested. Nothing we're trying to do, whether it's the mining method, the concentrate plant through the spirals, or the flotation, hasn't been done at commercial scale before. And in addition to that, we've proven all of this at our own facilities and our own pilot plants with the help of high quality, experienced contractors, consultants, and engineering providers. As we now move forward into the next phase of our development, following the execution of this joint venture and this exciting agreement, we no longer, yes, there's the blue sky aspect, but now how do we manage risk? How do we make sure to get into production on time, on budget, with stabilized cash flows? And we've done that by ticking boxes in every aspect of our business model that's required for us. First of all, in relation to geology, there's over 800 drill holes in the project area. Over 85% of our resource now is of a measured category, and over 95% of our reserves is of a proven category. In terms of the mining aspect, we'll be mining on free-flowing sand with low in duration, but the mining method selection is key for us to make sure that the operations is de-risked. In fact, we've probably built in a little bit more OPEX what we need to, but that's just so that we can get into stable commissioning smoothly and get into production smoothly. I've talked about the processing aspect, but the final thing that I want to highlight now is that we're going through ECI phase with Sedgman, and we're looking to targeting performance guarantees for all our process plants. In terms of the next phase and things that we're looking at moving forward, We benefit from a very advanced stage of approvals in relation to the Donald project, with the EAS, EPBC, mine license, and culture heritage management plan already completed. What's left is the work plan with the Government of Victoria, and I'm happy to advise that we submitted the work plan in October last year. We received feedback on the work plan early April, and we resubmitted that work plan based on all the advice that we were provided in early April and end of May. We're targeting the work plan being finalised within the next 3 to 4 months. And for those of you who aren't familiar with what that is, that's a suite of management plans, in fact 37 of them, that shows the government that we comply with all the legislative guidelines as set out within our EES statement and within the mining licence conditions. We're fully confident now with this most recent submission, we've met all those guidelines. And we look forward to engaging with the government, which has been very constructive in the past and continue to be. We look forward to engaging with them moving forward as we tidy the rest of the approvals up. Finally, as we get into this execution phase, we continue to build our team out. I've highlighted our capabilities previously in relation to the AGMs that we've held. But we're fortunate around the team that we've been able to establish and assemble. We've looked at bringing on people who have all done it before, whether it's Greg, Sean, Jess. They've all have a history of delivering upon projects. Greg in particular has overseen the development of a mineral sands project from his role as CFO in Mineral Deposits Limited. Sean has had over 40 years of experience developing projects with Anglo, BHP, Newcrest, and Ausenco. Personally, I take great pride in the fact that we've delivered upon the milestones as we set out. In 2022, we said that we'd release a mineral resource update to account for that xenotime, the heavy rare earths fraction of our resource. We did that in Q4. We said that we go out and release a definitive feasibility study in Q1 2023. We did that in April 2023. We said we'll release a PFS to show the upside of the Donald project with a phase 2 study PFS. We did that in June 2023. And finally, we said that we'll submit the approvals for the work plan in Q3 last year. We did that, I think, 2nd of October. Now with the execution of these binding agreements, we're now on a fast track towards FID, which we're targeting for the end of the year. We're fortunate as we get into this phase of our evolution to maintain a pretty strong social standing within the local community. And that's really important for us. Social standing, we don't take that the social license to operate, we don't take that for granted. In fact, it gives me great joy that we can hopefully bring to life, again, the town of Minyip and its surrounding locality to halt the rural decline that the region is experiencing, bring jobs, opportunities, and economic development to the area. Finally, I just want to highlight on this slide, mineral sands mining, by the way that is mined and progressively rehab, has low environmental impacts for a mining operation. From excavation to rehab, we will eventually return most of the soil back into farmland, apart from the offsets that we will be managing and where we'll be returning it back into native vegetation. Successful rehab has been demonstrated before, and we look forward to demonstrating that in our project here. I often tell our team that our products aren't just the rare earth products, aren't just the mineral sands products, the land that we rehab. And it's in our interest as well to get it back into good farmland conditions. Looking ahead, where to from here? With all of the equity component locked away, we'll now look to raise debt finance for the Donald project. Soundings have already commenced around this, where we've seen really positive responses from commercial banks globally and Australian for the debt component, which is expected to be circa 240 to 250 million. We've got to finalise the work plan, being that the final approval approval that's required, and then update the feasibility study to form a final investment decision pack, which we anticipate to update the CapEx, the OpEx by the end of the year. From there, we'll hopefully be at 21-month construction period and into operations into 2026. While all of this is going on in parallel, we'll be building our operational team for the handover from project into operation. And that's the next part in terms of our corporate capability that we're developing and bringing on board. I look forward to keeping you continuously updated in our progress in the next phase of Astron and our next phase of history. Thanks all again for taking the time to allow me to provide an update around the transaction and where we go from here. Thanks, Peter. I'll hand it back to you.
Thank you, Tiger. That was pretty comprehensive. And that Gantt chart at the end shows that there's a lot of news flow still to come through for everybody to be aware of.